As we talked about earlier, your credit is kind of like your resume, but it's a resume of how responsible are you with your finances. Now, with your credit, they're going to give you scores out there. Think about it. What do you think is a good credit score? What do you think is a bad credit score? 400? 400? Nah, 400 is not good. I wish it was, though. I used to be in that world, man. When I was actually younger, I got myself so many dumb credit cards. I had a 450 credit score. And one thing I can tell all y'all here is having a 450 credit score is going to make a $20,000 car maybe cost you $45,000. It's going to make a $150,000 house maybe cost you $275,000. To make a long story short, on put it in street terms, if you got a 400, some 500 credit score, you're going to get beat and taken advantage of on every purchase you ever make. Now, something that would be considered good would be above that 700 range. Today, we're not only going to talk about your credit score and what's bad and what's good, we're going to show you guys ways that you can improve those credit scores. Now, if I was to ask everybody a question, how many different organizations determine your credit score? By show of hands, how many different organizations out there determine what your credit score is? Let's see. 5, high, but no, I'm not sure. 3, yes. 3. Now, part of our enrichment project today. I know what they are. The question is, do you? Today, after we finish our lesson, what I want you to do is research what are the 3 organizations that report on your credit score. They have a name, they have apps where you can find them at. That's one of our online scavenger hunt things we'll work on later. Now, interest is the last thing I want to talk to y'all about in our morning session until we get into lunch. Your credit score determines interest that is put on prices, put on things that you buy. Interest, in another word, would be considered paying rent on the money that you borrow or paying rent on the product that you buy. An example, if my credit score is below 500, which is terrible, when I go to say if I want to take a loan out, I can take out $1,000. With a very bad credit score, I'm going to get an interest rate probably somewhere between 10 to 20, meaning that for me to take out $1,000, I'm going to get charged an extra $200 on that when I pay it back. And that's if I pay it back on time. So if I take out $1,000 with a terrible credit score, I'm in that 400 range, I take out $1,000, $200 I'm paying added on to interest. So at the end of that loan, I'll be paying $1,200 back. Now, let's say if I had the great credit, I didn't make the mistakes. What interest rate do some of y'all think about this in your head? And what I want you to do is write this down in your journals because we're going to talk about this later. With good credit, what percentage of an interest rate do you think that they're going to give me on borrowing $1,000? I already told you I have a terrible credit. They're hitting me with 20, so I'm paying $200 back. You can get it sometimes as low as 2%. And the great thing with good credit, and what we're going to teach you guys later in our project, is a lot of times through your bank, and if you got good credit, when you take that loan out, there's a certain amount of time you have to pay it back. And if you pay it back within that time, if you got good credit, so you've got a good financial resume, sometimes you can pay it back early enough to have no interest on it, take $1,000, pay back $1,000. Sometimes you might get 2%, still nowhere near as bad as 20 though. So keep that in mind. While we're eating lunch today, think about ways you may be able to improve your credit. Think about when you're my age. So right now, y'all all in that teen range, you're starting to become young adults, but let's say when you're above 25, what is your credit gonna look like? I know some of us might not think about that right now. Some of us might not factor that in, but the earlier that we start thinking about our credit, the earlier we start thinking about financial responsibility, the easier it is to get ourselves on the path to be successful. If you wait until you're 25 to think about it, that interest, that APR, them bills, smacking you right across the face. If you focus on it early, it's much easier as we get there. Only you can decide which person you will be. All right, take a couple minutes, finish up your questions, and then let's get to our lunch.